This is a Forex Preview. Thank you for joining us at XM.com. We'll be looking at the Bank of Canada policy meeting coming up this week and the outlook for the Loonie. Now, in an environment where most central banks keep raising rates to rein in inflation, the Bank of Canada might be the first to pause its tightening cycle. I'm Cristina Marujos. With me today is investment analyst Cristina Bartenido. Cristina, it's widely anticipated that the Bank of Canada will pause its rate hikes at this meeting as signaled previously, but does the economic data justify such a move right now?
Hi, Christina. Indeed, investors don't expect any change in interest rates in Canada this week. The central bank said clearly back in January that it will take a break from rate increases after a softer 25 basis point rate hike, explaining that the downturn in inflation is now providing some confidence to pause the tightening campaign and see how the economy responds to previous rate increases. Well, we shouldn't forget that Canadian households are among the most indebted households in the world, and the accommodative fiscal and monetary policies during the pandemic have motivated people to take extra debt. Specifically, debt to disposable income was last seen around 180% at the end of 2022, and the slowdown in the housing market is also reflecting some stress among consumers. So in a nutshell, Canada is more vulnerable to higher interest rates, and that explains the central bank's decision to adopt a wait-and-see approach. But besides that, the labor market is still resilient. Friday's employment report is expected to show a slight increase in jobs growth, which leaves room for an upside surprise, and the unemployment rate is expected to remain close to a record low. So as long as the labor market is strong, the central bank has the comfort to deliver additional rate hikes in order to fight inflation, which is still triple its target. Well, it's important to know that, to mention that investors are currently providing a very small probability for interest rates above 5%. They believe that the central bank will be on hold for most of the year, and they are even pricing a rate cut at the start of 2024, which personally think it's a bit premature pricing, given that other major central banks are still willing to drive rates higher during the next month. So although the current economic data justify a pause in rate increases at the moment, I think that the tightening phase in Canada is not over yet.
I see. And now let's turn to the market reaction. What could a pause in the Bank of Canada's tightening cycle mean for the Loonie?
Well, a pause in interest rates this week is already largely priced in, so the decision itself, the rate decision itself may not affect the Loonie. Investors will probably pay more attention to the central bank's economic outlook and its forward guidance. If, for example, policymakers keep the door open for additional rate hikes in the coming months to say that the fight against inflation is not over, questioning the pricing from investors, that could help the Loonie to recover some lost ground against the US dollar. The 1.36 and 1.3570 region is currently acting as support, so a break below that level could confirm additional losses in dollar Loonie. Of course, Powell's testimony before Congress could create volatility to the pair as well before the Bank of Canada's policy announcement, while the Bank of Japan's policy decision at the end of the week could be a more interesting event, a market mover potentially as well for Loonie pairs. So unless the Bank of Canada delivers a surprise hawkish pause, the Loonie could face additional losses.
Cristina, thanks so much. This was a Forex Preview. Thank you for joining us at XM.com.